experts on the show. Well, today on the show, we have Kunal Bothra joining us on the technicals right here in the studios. And on the fundamentals, we are joined by Rajesh Agarwal, Head of Research, AUM Capital. Hi, both of you gentlemen. Thank you so much for joining us. Good morning. Well, let's get started with the queries then. And this first one is coming from Bharatwaj, who's written to us from Coimbatore. He's asking if he should buy Hindustan Copper at the current market price. He's looking for a long-term investment of 3 to 4 years. And Rajesh, he is pretty well informed. He says that since copper demand is going to increase in the future due to, since it's a main raw material in EV and green energy power generation, so he is expecting the stock to, witness a run-up. If you could just give us your sense of what you think Hindustan Copper can do over a 3 to 4 year time horizon.
Good morning, Kanishka. Good morning, Srishti. Good morning, Kunal. Yes, the gentleman has said it right. Copper is a raw material for EV. And not only EV, but even solar power. There are a lot of consumption of copper, and that's why the demand is going up. And as far as Hindustan Copper is concerned, it's India's sole vertically integrated copper plant. With a capacity of around 3.75 metric tons per annum, which they plan to increase to 12.2 by FY30. So the capacity expansion is taking place. Demand is going up. And the best part is the supply at this point of time is not that great to cater to the demand. Government holds around 66% in the company. The company is doing very well. And yes, it's trading at multi-year highs at this point of time, but still we believe that there's a lot of steam left into this. Even the second quarter numbers were pretty good. So one can buy this for a long-term horizon. Maybe there might be some amount of consolidation or correction because of the kind of run-up which it had witnessed. But long-term looks good.
Long-term, it looks good. But apart from that, Hindustan Copper, Rajesh, any other metal picks, especially in the copper space, that you would like to suggest?
See, apart from copper, Hindustan Zinc looks good purely on the fact that 40% of the revenue comes, bottom line comes from silver, and we all know that how silver is performing at this point of time. But we are more bullish on the steel side, where we have been recommending our clients since a very long period of time in Jindal Steel and Power. Because of its capacity, the kind of debt reduction they have done, the kind of long rails they manufacture, I think Jindal Steel and Power can give good returns from this B levels too.
Right, that's the take coming in on JSPL. Let's watch out for that. But the next query that I have is coming in on IOB. And Kunal K. Guru is writing to us as he's holding 100 shares at a price of 65 rupees. Can he go ahead and average this particular counter at this price point?
Good morning, everyone. I think it's a good time to try and exit the stock rather than averaging out at current levels, because the stock has been a huge underperformer even at current levels of 33, 34 where the stock is trading right now. It's trading at a multi-year low for IOB, or maybe a multi-quarter low for the stock in that sense. So I would suggest to exit the stock and shift towards a better PSU bank name. If you're looking at if you're looking at something from the mid-cap arena, you might want to look at Indian Bank or Canara Bank, because both of these stocks are looking quite attractive at current juncture.
All right, so that's the view on the banking space. But let's move on. We have our next caller joining us live on the show. This is Anuj joining us from Delhi. Hi Anuj, very good morning. Please tell us, what's your query today?
Yeah, good morning. I bought 4,000 shares of Finolex last year, Finolex Cable.
Right.
Okay, at the rate of 1,100 last year in the month of December. Okay. Right now, even though despite of its low PE and PV ratio and a good fundamental, it has reached at the level of 700. I want to know the best price to do an average, and I want to know what's the monthly, I meant to say quarterly, half-yearly and yearly target for another year, because there is also an ongoing war among promoter because of this current level is very low.
Right. Cool. Okay, so let me come to you, Kunal, first. What are the technicals looking like for Finolex Cables? Currently is trading around those 730 levels. So definitely, I'm just sitting with some bit of loss right now. Do you think he should average at this juncture? What are your thoughts? How are 6-month and yearly charts looking like?
See, I think the long-term charts, of course, have been exceptionally strong for Finolex cables when we look at this from the 2019-2020 lows, because at that point the stock was sub 200, moved towards 1600 or 1500 plus mark, and now it's gone through a 50% kind of a correction from those 2024 highs. Even on the longer-term charts, when you look at the current juncture where the stock is at 730 thereabouts, the stock has come back towards a major retracement zone. More than a 68% retracement for the stock price from those previous lows which I was talking of. And the stock is also at a 10% to 15% divergence below its long-term moving averages. So price-wise, I think it's a very attractive zone for you to go for maybe an averaging out at current levels, because if you have a long-term time horizon, there is a very strong possibility that the stock may go back into a mean reversion phase and at least come back towards the zone closer to 850 to 1000 odd mark. So that's what I would probably place a target for the next 9 months to 12 months for the stock.
Okay, so that's 850. That's the target to look at for, say, a 9-month period. But Rajesh, let me quickly come to you as well. Kunal has pointed to us that it's a good time to average. It's looking attractive right now. But from a fundamental perspective, what are your thoughts about the cable space? Is Finolex Cables a preferred bet?
Yeah, I think it's a strong company, no doubts on that. Here the gentleman is sitting on a loss because we all know that how the mid caps and small caps have underperformed in the last 6 months or so. And many of the stocks are from 40-50% down from their recent highs. So just because of the markets, otherwise the company has been doing well. I think one can continue to go long on this. Averaging at this point of time can be done, because at these levels, I think already everything has been discounted in the price. So if the next quarter or two numbers are good, I think 850, 880 odd levels would be there in the next 6 months.
All right, that's the take coming in on Finolex Cables, both technical as well as fundamental view for our viewer. But moving on, viewers, and it's been a roller coaster year for the world's richest individuals. While some climbed the ladder and shattered the records, others fell prey to the global headwinds. Let me take it across to my colleague Snehi, who joins in with the list. Snehi.
Oh, well, yes, it's been a very exciting year for some of the top billionaires in the world. And on the flip side, for some of them, they've also lost a massive chunk of their wealth. So let's understand first. Let's talk about some of the billionaires who have added a lot of value to their overall net worth. Let's start by talking about the world's richest man, Elon Musk, added about $200 billion alone in the year gone by, taking his net worth to $632 billion. Remember, he's the CEO of Tesla, SpaceX, XAI, and also owns X, which is formerly Twitter. He owns 13% of Tesla and 42% of SpaceX, and that is where all his wealth is coming from. And yes, the IPO rumors around SpaceX also are too exciting to be missed right now, and that has also caused a buzz and the increment to his wealth. Next up, we have Larry Page, the co-founder of Google. He remains one of Alphabet's largest shareholders. He owns Alphabet Class A and Class B shares, added about $88 billion to his wealth, taking it up to $256.2 billion in 2025. At number 3, you have Sergey Brin, the other co-founder of Google, of course. He holds Alphabet equity and Class B Alphabet shares, added about $80 billion to his wealth, taking it up to $238.2 billion. At number 4 of someone who's added the most wealth to his net worth this year is Larry Ellison, the CTO of Oracle. He owns over 40% of Oracle shares, $39.3 billion added to the net worth, taking it up to $231.4. At number 5, of course, we have to talk about Jensen Huang, the founder and the CEO of NVIDIA. He owns 3% stake of NVIDIA, which he took public all the way back in 1999, but because of this AI boom and the semiconductor boom that we've seen in the year gone by, NVIDIA's stock price has moved massively. On the back of that, he has added about $34 billion to his wealth, taking it up to about $150 billion. So this was the list of everybody who has added to their net worth. Now on the flip side, let's take a look at some of the top names who have eroded a lot of wealth. At number 1, you have Bill Gates. His net worth dropped by $41.5 billion in 2025, taking it up to $117.2, because remember, the Gates Foundation Trust sold 65% of its Microsoft stake in Q3 of calendar year 2025, and that is why a big cut in his wealth as well. Next up, we have Changpeng Zhao, the former CEO of Binance. He owns roughly 90% stake in Binance, and given the way that we've seen the fluctuation in cryptocurrency and Bitcoin prices this year, he almost halved his wealth. He lost $18.5 billion to now get his wealth to $35 billion. At number 3, we have Shiv Nadar of India, founder and chairman of HCL Technologies. Remember, IT as a pack of stocks has not done very well in the year gone by. HCL Tech shares were down 12 to 13% based on the tariff-driven concerns that we saw in the first half of the year, and that has led to massive erosion in his wealth. At number 4, we also have Ravi Jaipuria, this chairperson of RJ Corp. He manages Varun Beverages and Devyani International, two stocks that have not done anything at all this year, lost $5 billion, taking his wealth to roughly $12.2 billion. So that is also roughly 50% of his wealth lost in the year gone by. Next up, we have Shapur Mistry and family. They control the construction giant Shapurji Palunji Group, and they hold 18.5% stake in Tata Sons. Now remember the tussle that we saw internally for the top post at Tata Sons. All of that has led to a lot of conflict, and that has led to a drop in their net worth. And this is post the restructuring, post the Cyrus Mistry feud and the Tata Sons ouster as well. So yes, that is the reason why Shapurji Palunji have also become one of the top wealth eroders. Lastly, let's also talk about Azim Premji, the founder and chairman of Wipro. He owns roughly 72% stake, but on the back of the same reasons that HCL Tech lost its market momentum on the back of tariff-driven tensions earlier in the year, the stock of Wipro has also not done all that well, and in fact, wealth has been eroded here to the tune of $4 billion, taking his net worth to now $27 billion US. So that is a list of all the top names in the world who have either added to or have seen their net worth get eroded due to multiple reasons in the year gone by.
Thanks, Nehi, for that list. Lots of wealth creators and losers in 2025. But with that, time now for a very short break. We'll be right back with more on the other side.
Welcome back to Buy Now Sell Now show, where we get you answers for all your stock related queries. We do have Kunal as well as Rajesh with us to guide you better. And let me take the next query with you, Rajesh. This query is coming in from Paresh from Bangalore. A bit of a longish query where he wants you to help with your view on PSUs. He's looking to make an investment for the next 3 years. Now he's exploring two options. One of them is an SIP route through CPSE ETF, or would you advise to buy individual counters like BEL, NTPC or Power Grid? So that's one part of his query. And along with that, he wants to know, is this a right time to invest in metal ETFs considering the valuations?
Let's take it one by one, Srishti. First, for the PSU part. See, there are two approaches to this investment. And one, what I would say is put at least 70-80% of the corpus which you want to put into PSU through SIP route into CPSE units. So that would give you exposure to the entire PSU basket as such. And you won't have to track on a daily basis. And the rest part you can put in individual stock, maybe a selective buy in railways or a defense pack. Like you can go for BEL or BML in a defense pack. In railways, you can go for IRCTC or RVNL. Even in PSU banking space, there are good names like, in a large cap, it's obviously SBI, or in a mid cap, small cap space, you can have a look at Bank of Maharashtra. So these are some of the choices in the PSU side, which one can have a look upon. But a major part of that, since you are looking for a long-term horizon, 3 years, 4 years down the line, should be in a SIP in CPSE, right? Now, coming to metals, you said it right, the valuations are overstretched. Just because there is a whole lot of demand and the supply is down, because of currency movements also, it's being affected. So there are a lot of factors going in favor of metal at this point of time, but one has to remember that this is a commodity and commodities have a cycle. Now it is on an up cycle. It might go in a down cycle in some in a near future. So it's better to be cautious into this. So at this point of time, I won't suggest going to a SIP mode into this. What you can do is at the best at this point of time, one can go long as we discussed in Hindustan Copper or Hindustan Zinc, which are doing very well, or even Jindal Steel and Power, which is doing well in industry space. So see, these are some of the picks in metals too.
That's about the PSU space and also the metals basket, the view coming from Rajesh. Moving on to our next query, this is coming from Murli Mohanji, who's written to us from Bengaluru. They say that they're a regular viewer of ET, so thank you so much for that. Kunal, this one is for you. The viewer has three queries. One is on Siemens. They have 100 shares at a price of 3,243. TCS 3,045 rupees is the buying price, and they're looking for a 3 to 6 month horizon in both of these. So what is the chart structure suggesting for Siemens and TCS? And they are looking to do a fresh buy in Shriram Finance in the current with the current market price, and again a time horizon of 6 months or so. What would you suggest? Should they continue with that?
So the charts for both the first ones, Siemens as well as TCS, they are slightly weak because both of these stocks are now come back again in, sub their 200 moving averages, and that I believe could be a concern over the near term since we have a very short term kind of a time horizon, 3-6 months approximately. There could be a point where these stocks may first go into a correction and then come back into a recovery mode. So that would not leave you with a, maybe not a great margin in terms of the potential returns on the upside. But in case if say over the next 1 month you get an opportunity where these stocks correct by another 8% to 10% from the current levels, that I believe could be a good opportunity where you may try to chip into both of these names. So keep an eye on both of these stocks, Siemens as well as TCS, but on lower levels is where I would suggest a buy. Coming to the third name which you had, which is on Shriram Finance, I believe that at current levels, you can consider buying the stock because of the breakout the stock has shown, the volumes it has shown post the news flow from that 900 levels for Shriram Finance. So that I believe could be a good stock where you may look to invest or trade for a period of 3 to 6 months.
All right, so that's the take coming in on all of these stocks. But Rajesh, what's your take on IRCTC? Because Suresh from Ludhiana has been holding IRCTC 215 quantity from a price of 804 rupees for almost an year now. And he's not having that big of a movement that we see on IRCTC, and also Suresh is at a loss. What's your take on IRCTC? Should he hope for recovery or look out for better opportunities?
See, for a long term, yes, it's a good call, no doubt on that. All the divisions, be it catering, ticketing, tourism, are seeing steady demand. In some of the business, like the catering or ticketing, even rail, that's water business, they have the monopoly in railways. The company is doing well. The numbers have been pretty good. It's a debt-free company. With the launch of new trains like Vande Bharat and others, the company is going to benefit from that. They have some tie-ups with Zomato, full coach booking, and they have started outside catering too. So these are some of the positives going in favor of IRCTC. Somehow, unfortunately, it has done nothing on the bourses, and investors are either sitting on a loss of just have done nothing, I would say. But the fundamentals are very strong, and I believe that in the next 1 year or so, 1 year or time horizon, it can move to around 800, 850 odd levels. So one can even add at these levels.
You could look at adding IRCTC, and the fundamentals also look strong, especially given the travel season. But let's move on to another query. This one is coming from Vijay. He's our viewer from Dubai. He wants a view on Brigade Enterprises. He's bought it at a price of 872. That's his average price. And Blue Jet as well, 516 is the average price. He hasn't mentioned a time horizon here, but Kunal, from say a 6-month perspective, what do you think? What's the target that one should look at? Brigade Enterprises and Blue Jet.
See, Blue Jet I don't cover, so I'll skip that. But Brigade, on one hand, I think has gone through a major correction from I think 1400 plus levels in 2024 to 860, where the stock is trading right now. It looks like that the stock has now managed to come back towards a good support on the longer term charts. The pace of selling for the stock has also halted. Yes, the stock has been making new swing lows on the medium term charts, but then the intensity of the sell off has reduced dramatically for Brigade. So which means maybe another 40-50 points on the downside, say closer to 800 levels, is where I would believe could be a very good opportunity where you may want to chip into the stock price. So you can have a two-pronged strategy. You can start looking at investing maybe 50% of your expected capital at current levels 860 thereabouts for Brigade. And in case if the stock drops down to 800 levels, I believe that you could look to deploy the second tranche, because I think at those levels the stock could be entering into deep oversold territory, and the probability of a bounce back post that could be extremely high.
All right, that's the take coming in on Brigade Enterprise. But Rajesh, the next query is specifically for you. Raman from Chennai has been holding two counters. One of them is IIFL Capital at a price of 300 rupees, and he also has Heritage Foods in his portfolio from a price of 439 rupees. Are these stocks worth holding, buy more, or maybe look out for some other stocks?
NBFC as a space are doing very well. IFL Capital being one of them. I think it's one of our long-term play and we continue to hold. As far as Heritage Food is concerned, I think the volumes are very low. Company has been doing flattish kind of growth, but for long term, it looks very prospective because of the kind of some of the brands it's hold. So at this point of time, both are a hold at this point of time. But at Heritage Food, I think any up move from these levels to maybe 8 to 10% up move from here could be a good time to book profit.
Okay, so a hold call for both of them, and if it goes up 8 to 10%, you could look at booking some profit in Heritage Food. That's the word coming in. But time now for a very quick break. We'll be right back to answer more of your queries. Hi there, welcome back to Rishina. You're watching Buy Now Sell Now with me, Kanishka Sarkar and Srishti Sharma, and we're answering all your stock-specific queries with our experts. So let's get back to all the queries then. And this one is coming from our viewer Murli, who's writing to us from Andhra Pradesh. He's bought GE Vernova at a price of 3,225 rupees. He has about 90 shares of this counter. And he's looking at a 3-month time horizon. Kunal, what do you think? Should he continue to hold it or sell at the current juncture?
No, I think I would suggest to hold on to the stock as of now, because it looks like that the stock is just about trying to form a near to medium term bottom at current levels. We've seen the news flow to be quite active for the stock price at current levels. So I believe that the stock looks attractive and would suggest a hold.
All right, that's a hold coming in on GE TND, Vernova TND. But the next query that I have is coming in from a viewer. And Kunal, let me take it from you. This query is from Satya Veni, writing to us from Hyderabad. He says that he wants a technical advice on two counters. One of them is CESC. Have bought over 1100 shares, buy price is almost 200 rupees, and he also has Electra Green 98 in quantity. Here the buy price is close to 1800 rupees. What's your take on both of these stocks and what should he do?
See, I think both of these stocks I would suggest a hold, or maybe if you're looking to average or add further, I think I would suggest an averaging out as well as add on both of these names, because both CESC as well as Electra Green Tech, I think the charts for these stocks on the medium to long term charts have been very attractive. What I like about the charts for both of these stocks is the correlation the stocks have with respect to the overall market sentiment. So whenever the market sentiment has become positive, we've actually seen that both of these stocks, they managed to show a lot of active participation. That I believe is a very strong sign, because then when you're aligned to the benchmark indices or to the overall market sentiment, the chances of the stock recovering are pretty much on the higher side, especially at a time when the mid caps, the number of mid caps recovering are far less. So I think in that sense, I would suggest a buy or even an add at current levels.
Well, all right, so a buy or add at the current levels for CESC. That's the word coming in. Moving on to our next query. This one is coming from Nachi, who's written to us from Chennai. Rajesh, they're looking to invest in a pharma counter. Acum Drugs is the one that they want to invest in. From a long-term perspective, they haven't given us a clear horizon, but yes, a long-term time frame is what they're looking at. The stock has already declined about 30% in the year 2025. But from here on, what do you expect? Could there be a turnaround in this counter? What are the fundamentals looking like?
See, I don't find any reason to believe that there will be a turnaround in the near future, of course. But the company has been doing well. The product profile is good. Maybe in a longer term horizon, in the next 12 to 18 months, something might happen. But at this point of time, point putting money in this. Maybe a better names in pharma would like Cipla or a Dr. Reddy, even Blue Jet Pharma would be a better choice than at this point of time.
All right, that's the take coming in on select pharma counters. But the next query that I have is coming in on Eternal. Kunal, this counter is been in focus, and even today, on the back of a news flow, this stock is a bit under pressure. But a viewer actually, he didn't mention his name, but let me just take it as query, where he's holding 1,000 shares of Eternal. Average price is 330 rupees. What should we do?
See, I think reaching towards the 330 mark would probably take some bit of more time for Eternal, because I would sense that the stock is going through more of a grinding time-wise consolidation rather than a major price correction. At 280 levels thereabout, it also looks like that the stock is trying to establish a base, form a bottom. So, and that process may take another 1 to 3 months for the stock price. Now, I would suggest to hold on to the stock as of now. And in case if the stock, say, on an intra-month basis, drifts down or drops down to 265 to 70 range, that's where I would probably suggest to average out, because then your average cost price would come back to, say, closer to 290 to 95 for Eternal. So it's a hold as of now, but in case if the stock drops down to 260 odd levels, that's where I would suggest to average out.
Okay, so you could average at 260 levels. That's the word coming in on Eternal. But moving on to another query coming out of Chennai. This is Chalam writing in about ITC. There are 4,600 shares at a price of 126 rupees. This includes bonus shares that they got more than a decade ago. What's your recommendation? Should they continue to hold or sell? Also, they're asking any partial, full, or any suggestion for diversification that you would like to suggest. Rajesh, let me come to you first. They're sitting with a significant amount of profit, more than 3 times is what they have right now. So, what would you suggest? Should they continue to hold on to ITC for an even longer term, or should they look at diversifying now?
It's a buy from a side. And despite the fact that it's almost 3 times from what the investor has bought, but still it's a buy. Company has been doing very well. FMCG as a division has started doing well. In cigarettes also we have seen volumes going up. Debt-free company, strong balance sheet, high margins, high capital ratios. Every parameter the company is very strong. For a long-term horizon, one can continue to hold. And the best part is it doles out good amount of dividend too. So it's a hold and a buy from our side.
So hold and a buy call on ITC from a long-term perspective. But Kunal, let me come to you as well. What do you think in the what does 2026 hold as far as the charts are concerned for ITC?
See, I believe that at current levels, the stock has gone through a decent time-wise consolidation. It's a stock which is typically very low beta. It tends to just about hang around to a trading range. We've seen that happening for ITC in the previous maybe a 5-year kind of a period also, where the stock was stuck at 200 odd levels, and then for months and quarters the stock remained sideways. But then the moment the stock managed to gain pace, we saw the stock moving from 200 to I think a zone of 500ish kind of a mark in 2024. So in that sense, now 400 could be a new normal for ITC, where the stock is hanging around. I believe at current levels you can go for a buy, even a hold at current levels, because whenever the rally kickstarts again for this stock, I would believe that the next level on the upside we could be looking at could be on the higher side of 650 to even 700 potentially over the next 2 to 3 years. So time is the only essence over here. If you're okay with holding on to the stock on the longer term charts, I would suggest a hold as well as even an add at current levels.
All right, so that's the take coming in on ITC, both fundamental and technical call coming in over there. But the next query that I have is coming in, let me take it from you, Kunal, wherein one of our viewers named Imtiaz from Kolkata wants an advice on 2 counters. One of that is Castrol, bought 500 shares at a price of 230 rupees. Average out this counter or book a loss, because of late the stock has been in focus. Maybe an open offer is likely from the kind of deal that the parent company has done. And 200 shares of Signed, he has bought at a price of 1330 rupees. What to do in this as well?
See, I missed out the name of the second stock, which is Signed. Okay.
Yes.
Okay, so I'll start off with Castrol first. I think for the first time in the last, 6 months or so, we're seeing some good volumes, news flow for the stock price. Yes, it's been in the thick of news flow in the last, week or so. But then I think if that manages to arrest the stock price, that I believe could be a sign which you should be watching out for. So I would not suggest an averaging out at current levels. You may just hold on to the quantity which you bought at 230 odd levels for Castrol. But in case if the stock say comes back to its 200-day moving average, which is at closer to 200, 205 mark for Castrol, then I believe that that's a good zone where you may look to average out, because then the momentum will come back again into the stock price. Same is the case with Cyient. Now we've seen a point where IT, mid-cap IT stocks have done reasonably well, but Cyient has been one of the few stocks which have gone through a correction. I would suggest maybe an averaging out or a buy once the stock crosses its 200-day moving average. That level is approximately 1200 for the stock.
All right, so that's the view on Castrol India as well as Cyient. But with that, time now for a very short break. We'll be right back to answer more of your queries on the other side. Hi there, welcome back to ET Now. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Srishti Sharma. This is a show where we are answering all your stock-specific queries with our experts. So let's get back then. We still have Kunal and Rajesh with us. Now, Rajesh, this one is coming on Alcargo Logistics. The viewer Gudia Gaur, she's writing to us from Lucknow. She bought the stock at a very high price. 51 rupees is her buying price. She's sitting with a significant loss. She wants the view for the next year. What do you think? Could she recover some of these losses in the year going forward, or should she book her losses at this current juncture and move into another stock?
Seems difficult. The numbers are not supportive. Even after the corporate restructuring which they had, nothing happened. And I don't find any reason to believe that in the near future something would happen. So maybe if the market support, there would be a gain of 1 rupee or 2 rupee here and there. It's better to switch to a better counters.
All right, better to switch to other counters, but yes, indeed, already at a deep loss, and sometimes it gets difficult to make an move out there. But the next query, let's move on to that. This query is coming in from K. Narasimha Reddy, and Rajesh, this query is on Bharti Hexaware. Let me come to you because this counter is not traded that much, wherein Narasimha Reddy is holding 25 shares, buy price is 1920. What's your take here?
Continue to hold. The numbers have been good. It's operating its mobile circles into some of the parts of the country. Shown good growth, and going forward with the increase in revenue due to ARPUs and all, I think 1900 would be a good level to watch out for the next 6 to 9 months. So it's a hold from a side.
Okay, so a whole call on Bharti Hexacom. Moving on to the next question. This one is Vijay Kirti writing to us from Chennai. Their queries on the financial space. Kunal, they hold M&M Financial. Their average holding price is 294 rupees. So they're sitting with a significant amount of profit right now. Should they book some of their profit, or should they continue to hold for a relatively longer term? What would you suggest?
I'll suggest to hold on, and we've seen historically also that whenever M&M Finance has managed to close at the high point on a YTD basis, it's managed to carry forward the momentum at least for a good part of the next year. Even if, even in cases where, for example, in 2022, when the stock had delivered returns of more than 40-50% on a YTD basis, the next year, next following year, the stock delivered another 15 to 20% on the upside subsequently. So even if you're looking at this as a, say, another 3-month or a 6-month time horizon, I would suggest to hold on to the stock price, and there could be a potential another 15 to 20% jump into the stock price, say closer to 460, 450 mark is where you may want to consider booking out profits.
All right, that's about M&M Finance. But Kunal, one more query coming your way. Karthi Kayan, who wants a view on Aether Industries, specifically from a technical point of view. Good time to enter this counter and accumulate for the next 1 year?
See, it started to look very attractive because the volumes in the previous month, I think the month of October, November, for Aether had started to improve. We've seen a good jump in the stock price in that zone where it moved from 700 levels to 900, 950 kind of a zone. And now it's cooled off again. So price-wise as well as volume-wise, it starts to look attractive. The only concern is that most of the indicators are still into a neutral to negative territory for Aether, and that turnaround for indicators could happen once the stock retests levels of 900 to 950 on the higher side. So looks attractive if you're looking at a preemptive trade, but if you're looking at a breakout confirmation, then I would suggest a buying, closer to 900 or 950 range for the stock.
All right, so that's the view on Aether Energies. But moving on, let's get another query answered. Rajesh, this one is coming on the defense space. Our viewer Bala from Chennai, they've been holding MTA Tech. Right now, they are sitting with gains of about 5%. They want to know, should they book some of it and or should they continue to hold it for the longer term? Now, all of these defense counters, they already saw a very significant run up early in the first half of 2025. And yesterday, we just had the DAC approve about 79,000 crore worth of procurement proposals. So, what do you see for the for this counter going forward in 2026? Could it get a lot of orders since these proposals have been cleared by the DAC? And the key brokerage takeaway so far has been that the order momentum is going to increase. The transition time is going to reduce, beg your pardon. So do you think MTA Tech could be a beneficiary here?
See, Kanishka, you said it right. Defense is in focus. In the recent past, I would say, a lot of companies have strong order book. They have execution visibilities. Government push for defense modernization is there. The order book is giving at least 3 to 5 years of revenue visibility, which ensures stability in numbers in most of these companies. India as a country is targeting around 3 trillion of defense production by 2029, and out of which 50,000 odd crores would be from export orders. So I mean to say that not only domestic orders, but these companies are sitting on many export orders too. Some of the good names are HAL, BDL doing very well, GRST doing well, solar industry doing well. Even MTR has a good order book, can be considered to hold. And even in the past also we have seen as we go near to the budget dates, these stocks like defense, railways start doing well. So even for the short term, maybe there will be a target of 2,500 odd rupees. But for a longer term horizon, one can continue to hold.
All right, so that's the take coming in on MTAR Tech. The next query that I have is coming in from Nikhil Sharma. And Kunal, he wants a view on Chalet Hotels, bought at a price of 875 rupees. What's the short and the long-term view on this particular counter?
See, short-term view is that the stock is going through a consolidation, something which I think would probably take maybe another few months for the stock price, because when you look at the drift from the stock from the higher levels, 1,050 for Chalet Hotels towards a point when the stock is at 850 levels, it looks like that the stock is going through a time-wise consolidation. But it may not result into a major price correction to the stock price, because stocks like Chalet Hotels are considered to be low to moderate beta stocks, and they go into a major time-wise consolidation, so that waiting period is very much on the higher side for the stock. So I think in that sense, I would suggest that if you're looking to buy average further for the stock, wait out for a point when the stock gradually drifts towards the 750 zone. That could be a point where you may consider averaging out.
Okay, so that's the view on Chalet Hotels. Moving on to another query. This one is coming from the Alco Web space. Good time to address this space, Kunal. Just around the corner, New Year is here. New Year parties are going to be there. Just one of those counters here, GM Breweries. This is a viewer, Khurshid from Delhi. They have 150 shares at a price of 1,100 rupees. So just a little bit of amount, of profit is what they are sitting with. They want to know, should they continue holding this for the long term, or should they book some of their profits as soon as they find the right opportunity? And if you suggest booking profits, is now the right opportunity, or could we see, some bit of run up further that is due?
So I'll suggest to hold on to the stock as of now. 1,300 seems to be a good zone where you may want to consider booking out profits. So maybe plus minus 10-20 points from those 1,300 levels is where I would suggest that maybe the first level of a major resistance could come in for GM Brewery. So it's a good chart. It's managed to, I would say, survive very well in terms of the market volatility and correction, and made a very good comeback for the last couple of quarters. But 1,300 seems to be a zone where the stock is facing resistance. So closer to the 1,300 mark is where I would suggest to book profits.
All right, that's the take coming in on GM Breweries. But Rajesh, the next query is on LIC, wherein Rajiv from Gurgaon has been holding the stock from a price of 931 rupees for almost a year now. Should he wait, average, or book the loss?
See, this is one of the strongest company, I would say, in the insurance sector, having market share of more than 60%, doing very well, very, very strong balance sheet. The EP, VNB, all have been growing from the last 2, 3 quarters, and still it has not done anything in the bourses. I would say it's unfortunate to say the least, but still, I believe that fundamentally it is one of the strongest company in the insurance space as such. And going forward, it can move to maybe we have a target of 4 figures in the next 1 year or so. So any fall should be taken as an opportunity to add, and somebody holding can continue to hold.
Okay, so that's the word coming in on LIC. But let's move on and have another query answered for the day. Yet again from the pharma space, Rajesh. This is, he's asking whether it's a good time to enter Zydus Life. This is Balakrishnan writing from Chennai. What would you suggest? Is it a good time, Zydus Life?
Depending on a time horizon, if you have a time horizon of around 12 to 18 months, yes, one can consider buying this. The stock have seen good amount of correction from the recent highs, and despite the fact that the product portfolio is good, doing very well. They have some new launches also lined up. So maybe a target of 1,200 odd rupees in the next 1 year or so is quite possible. So one can add to this.
That's the 1 year view. But what about you, Kunal? Do you think, what is the short term view, say about the 6 months? Where do you think the stock is going to be headed for?
See, I think the stock is into an underperforming spree. The last 2 or 3 months, the stock has seen a consistent correction. The concern is that the stock price or the indicators are not yet entered into the oversold territory for Zydus Life. Maybe that could be a reason why the stock may continue to drift a little lower. We need to wait for a point where the stock reaches the oversold nature in terms of indicators. That's where we may anticipate that the stock could start to bottom out and then show signs of recovery.
All right, that's the take coming in on Zydus Life. And the last query is actually on Trent. Rajesh, what's your view here? Wherein Ignitis from Kolkata is holding 10 shares, buy price is close to 6,000 rupees. With the kind of concerns regarding the slowdown in growth, we have seen the stock drifting lower. But what should Ignitis do right now? Should he go ahead and average to bring his cost price lower or exit this counter?
See, if your time horizon of 12 to 18 months, once again, I would say for a long-term time horizon, you can add at these levels. All the negatives about slow volumes and all those things have been discounted in the price, protected quite a lot from tops. They are doing very well, not only into West Side, but also into value retailing, that's Zudio. Even their hypermarket, that Star Bazaar, is doing well. They have moved into lab-grown diamonds too. So everything is in their favor. There was a froth in the valuation sometimes back, and that has been taken care of by the correction. I think it's high time it starts moving up. So 4,000 odd levels would be a great level to add for somebody looking for a long-term horizon.
Okay, so that's about Trent, and also this is the last talk of the day. Thank you so much, Kunal and Rajesh, for joining us today and helping us with all of the queries, either on the fundamentals or on the technical side. Thank you so much for joining us today. All right, with that, we're